amazing life.
Billionaire Warren Edward Buffett, born August 30, 1930, is an American investor, business tycoon, and philanthropist, who is the chairman and CEO of Berkshire Hathaway. He is considered one of the most successful investors in the world and has a net worth of $88.9 billion United States dollars as of December 2019, making him the fourth wealthiest person in the world. When it comes to investing, money or even life, the Berkshire Hathaway founder always finds the right words to lend wisdom and inspiration. We simply attempt to be fearful when others are greedy and to be greedy only when others are fearful. Price is what you pay. Value is what you get. Someone's sitting in the shade today because someone planted a tree a long time ago. So, why didn't Warren Buffett invest in any cryptocurrency like Bitcoin and gold? Interestingly, Warren Buffett was aware of Bitcoin and had a basic understanding of it earlier than 99% of the general public. In a March 2014 interview he gave on CNBC, he remarked, "It's a method of transmitting money. It's a very effective way of transmitting money and you can do it anonymously and all that. A check is a way of transmitting money, too. Are checks worth a whole lot of money just because they can transmit money? Are money orders? You can transmit money by money orders. People do it. I hope Bitcoin becomes a better way of doing it, but you can replicate it a bunch of different ways and it will be. The idea that it has some huge intrinsic value is just a joke in my view." At the time one Bitcoin was trading at around $600. Today, December 15, 2017, it is trading nearly 30x higher at $17,640, and I am pretty sure he has not changed his view one iota. In a recent discussion with MBA students in Omaha, here is what he had to say about Bitcoin. Unsurprisingly, Buffett thinks coin offerings will end badly. People get excited from big price movements, and Wall Street accommodates, he said. Bitcoin, the mother of all digital currencies, currently trades at around $5,700, with a market cap now surpassing $90 billion. Still, Buffett remains skeptical, saying, "You can't value Bitcoin because it's not a value-producing asset." He added that there's no telling how far Bitcoin's price will go and described it as a real bubble in that sort of thing. Mr. Buffett views Bitcoin the same way he views gold, which he has never invested in. This is what he had to say about gold in his 2011 annual letter. "The second major category of investments involves assets that will never produce anything, but that are purchased in the buyer's hope that someone else, who also knows that the assets will be forever unproductive, will pay more for them in the future." Tulips, of all things, briefly became a favorite of such buyers in the 17th century. This type of investment requires an expanding pool of buyers, who, in turn, are enticed because they believe the buying pool will expand still further. Owners are not inspired by what the asset itself can produce, it will remain lifeless forever, but rather by the belief that others will desire it even more avidly in the future. The major asset in this category is gold, currently a huge favorite of investors who fear almost all other assets, especially paper money, of whose value, as noted, they are right to be fearful. Gold, however, has two significant shortcomings, being neither of much use nor procreative. True, gold has some industrial and decorative utility, but the demand for these purposes is both limited and incapable of soaking up new production. Meanwhile, if you own 1 ounce of gold for an eternity, you will still own 1 ounce at its end. What motivates most gold purchasers is their belief that the ranks of the fearful will grow. During the past decade that belief has proved correct. Beyond that, the rising price has on its own generated additional buying enthusiasm, attracting purchasers who see the rise as validating an investment thesis. As bandwagon investors join any party, they create their own truth, for a while. Over the past 15 years, both internet stocks and houses have demonstrated the extraordinary excesses that can be created by combining an initially sensible thesis with well-publicized rising prices. In these bubbles, an army of originally skeptical investors succumbed to the proof delivered by the market, and the pool of buyers, for a time, expanded sufficiently to keep the bandwagon rolling. But bubbles blown large enough inevitably pop. And then the old proverb is confirmed once again, what the wise man does in the beginning, the fool does in the end. Today the world's gold stock is about 170,000 metric tons. If all of this gold were melded together, it would form a cube of about 68 feet per side. Picture it fitting comfortably within a baseball infield. At $1,750 per ounce, gold's price as I write this, its value would be $9.6 trillion. Call this cube pile A. Let's now create a pile B costing an equal amount. For that, we could buy all U.S. cropland, 400 million acres with output of about $200 billion annually, plus 16 ExxonMobils, the world's most profitable company, one earning more than $40 billion annually. After these purchases, we would have about $1 trillion left over for walking around money, no sense feeling strapped after this buying binge. Can you imagine an investor with $9.6 trillion selecting pile A over pile B? Beyond the staggering valuation given the existing stock of gold, current prices make today's annual production of gold command about $160 billion. Buyers, whether jewelry and industrial users, frightened individuals, or speculators, must continually absorb this additional supply to merely maintain an equilibrium at present prices. A century from now the 400 million acres of farmland will have produced staggering amounts of corn, wheat, cotton, and other crops, and will continue to produce that valuable bounty, whatever the currency may be. ExxonMobil will probably have delivered trillions of dollars in dividends to its owners and will also hold assets worth many more trillions and, remember, you get 16 Exxons. The 170,000 tons of gold will be unchanged in size and still incapable of producing anything. You can fondle the cube, but it will not respond. Admittedly, when people a century from now are fearful, it's likely many will still rush to gold. I'm confident, however, that the $9.6 trillion current valuation of Pile A will compound over the century at a rate far inferior to that achieved by Pile B. Mr. Buffett is not infallible. He does make mistakes from time to time, including those of omission. He probably does not understand all of the nitty-gritty details behind Bitcoin and blockchain technology. Regardless, even if you are the biggest bull ever on Bitcoin, crypto assets and/or general blockchain technology and can poke a million holes in his argument, I still think it's worth trying to genuinely understand the argument he is making here. Even if you remain unpersuaded and debunk it in your head, at least now you can push on ahead with even greater conviction and resolve than before. Thank you for watching. If you loved this, please share the video and spread the message on social media using the share links in this video. Subscribe for my YouTube channel. We appreciate every one of you.